Welcome back everyone to the Moneycontrol live stream. You are watching another edition of Markets with Santo and CJ. Well, it seems that we are all set for a very weak closing. We are going to end the week the way we started, that is in the negative territory. And the stocks have taken battering across the board. Talk about large caps, small caps, mid caps. Everybody was down and out today. Santo.
Well, CJ, I think finally the reality of inflation and the impact that it's going to have on growth finally seems to be sinking in, and that's what's triggering this kind of a sell-off across the globe.
But remember what I said in the morning, right? This is markets Black Friday sale, so there will also be opportunities. But that said, let's confront the reality right now. Nifty and Sensex are both down about 1.8% in trade, and the mid and small cap space has actually underperformed at this point of time. The Nifty small cap index was down more than 2.8% at one point of time. So clearly, even retail investors who have been, very optimistic in buying a lot of the correction in this market, even they are seemingly losing patience with the sort of volatility that we are seeing in this market.
Not the old school ones, I will say.
We don't know that for sure yet. And lastly, the fear index, the India VIX index, which basically tells you the sort of market sentiment, that index also surged about 6% in trade, which clearly reflects that there is risk aversion in the market, and investors at this point of time don't want to touch anything of the fear of probably catching a falling knife.
Well, yes, CJ, and what they say about the stock market is that this is the only place where actually higher the price, more the buyers. So ideally, you mentioned the Black Friday sale happening here, but it's the reverse. In fact, if prices are going up, you'll find more buyers.
My reason for saying that was that I'm hoping that the barrage of Warren Buffett quotes that tend to hit Twitter at this point of time would probably have educated the investors over the past 2 years.
Yeah, and so bears appear to be back with a vengeance at this point. But yet, if you see the trend over the last few months, you'll see that market goes down, and then there's a sharp relief rally which goes on for a few days, and then again. So it's not as if the bears will have it easy in the coming days. This is again going to be a grinding market. 2 steps back, 1 step forward, 2 steps back. So it's ultimately, I think, no clear winners here, at least in the short term.
Absolutely no clear winners, but I think the only winners probably in this market are the traders. They love volatility and they can make money both sides. The investors may probably suffer in the near term and in the medium term, but it's the traders who are probably minting the money and laughing to the bank at this point.
As long as they're nimble-footed. With that, let's just take a look at the stocks on our watch list today, starting with TVS Motors. Now, the stock managed to hold ground in a bearish market today. Fourth quarter volumes did see a decline, but the heartening part is that the company did manage to hold on to its margins, and quite a few brokerages have also raised their target prices for the stock. And according to analysts tracking the stock, the good part is that exports for TVS Motors seem to be holding up pretty well, and they've also been able to improve their market share in premium bikes as well as scooters. And most analysts seem to be enthused about the aggressive plans that TVS Motors has for its electric vehicle business. Jefferies has raised the target price for the stock to about 800, so I beg your pardon, 800 rupees, and CLSA has increased the target price to 724 rupees.
Wow. Talking about bargain buyers, I was referring to bargain buyers earlier. ICICI Bank is one stock that has come under selling pressure today on market chatter that there's some large MF who was selling on the counter. But if you look at the fundamentals, right, if you take today's movement aside, probably among all of the banks that have reported the Q4 earnings so far, ICICI Bank stood out on its own. The numbers on operational metrics, in terms of net interest income, in terms of NPA improvement, they were all stellar. And if there is one bank where there is almost certain, confidence that it will do well over the next 2 to 3 years, and that is ICICI Bank. So probably a lot of investors with a medium to longer term time frame would look at today's selling in the stock as a bargain buying opportunity, and we will probably see that reflected in the coming few sessions.
Probably it could be more of sentiment also. You're seeing weakness across the banking sector today, and also remember ICICI is a bank where FIs are in majority. In fact, in most private sector banks, it's FIs which are the dominant force. So even if there is some selling, even if it's there has been chatter about redemptions and all that talk, even if that is true, you'd still see that the stock may not fall so much purely based on that, because the actual impact of that selling by domestics won't be enough to kind of impact the stock price. And coming to going on to the next stock, Petronet LNG, this stock also has been an outperformer in the market over the past few trading sessions. For the year as a whole, since 2022, since the start of 2022, the stock has been an underperformer, but in the last few days the fortune seems to have changed a bit, and that could have to do with the fact that valuations now are beginning to look a little benign after the sustained fall in prices over the last few months. Also, the stock, analysts say, is a bet on rising gas consumption in the country. Sentiment for the stock has been hit because industrial users have cut back on purchase because of high gas prices, but if gas prices were to soften going forward, which most likely they will, then clearly Petronet LNG is one of the beneficiaries.
Well, Santo, one stock where there is a lot of trend reversal happening is Angel One. Just a few days ago, if you remember, I was talking in such glowing terms about Angel One after their Q4 earnings had come out. But in the past 3 sessions alone, the stock has given almost 30% of its gains from its highs. And if you look at it from the current lows to the recent highs, the fall is as much as 50% in just 3 sessions. And clearly, the commentary that came in from one of his bigger rivals, Zerodha's founder Nitin Kamath, recently about how the broking industry's user growth may slow down going ahead as the market will turn more volatile, and also indicating what has happened to Robinhood, which has been one of the revolutionary brokers in the US, how their earnings have been suffering and how their valuations have taken a cut, is clearly panicked a lot of investors on Angel One, and we are seeing that reflect in the stock price action at this point of time. If you look at it, there is some truth to the fact that market turmoil does lead to some sort of a moderation in retail participation. But that said, if you look at the numbers that are coming in from Angel One, they just came out with their monthly update for April, and overall you saw month on month and sequential improvement in both user additions as well as active user participation. So whereas the industry leader now is saying that user growth is going to slow down, user participation is going to slow down, Angel One is somehow still managing to stand out. Now at this point of time, it seems investors are going with the majority view, going with what the industry leader is saying. But if Angel One continues to stand out as it is doing right now in terms of its monthly updates, it is very likely possible that investors may turn around and say, hold on, maybe this company is doing something right that others are not doing, and that could result in even greater premium valuations for Angel One compared to the rest of the industry.
Well, what Nitin Kamath said is not new. He has mentioned this in the past also. I think what we are seeing right now is that sentiment is at such a low ebb that investors are going after the stocks which have which have run up sharply. So whenever there's an overall downtrend in the market, there's a time when investors rush in to take profits where they're still in a plus position. I think broking stocks clearly have been among the best performers in the market, so it's not very surprising to see people take some money off the table for now. But at the same time, this is a market, and I think this is also the point you were making earlier in the day today, that a lot of people, at least at the retail side of it, those who have not invested so far, many of them are seeing this as an opportunity because they're looking at this market compared to the highs that it had made last year. So I guess there will be a new wave of investors coming in, at least for the next few months.
Yeah, personally I totally agree with you. I do not expect Angel One to be down in the dumps just because of the general cyclical nature of the broking industry, because let's remember the theme of the overall, the 20-year theme here, right? The 20-year theme here is that more and more people in this country are opening demat accounts, are beginning to look at equity investments as a savings instrument, and therefore the broking industry per se will definitely benefit from the user growth. Probably competition at this point of time is too high for any sort of margin improvement, but maybe going ahead you might see consolidation in industry. That is how almost every industry develops. You see bouts of competition and then you see bouts of consolidation. So the longer term theory on Angel One remains pretty much intact from my point of view.
HDFC AMC, the next stock on the watch list. Now we saw some bit of bargain buying in the stock at lower levels today, but the stock is still making new 52-week lows. There are
not surprised at all.
Yes, true. You know, the latest quarterly numbers were not all that great. HDFC AMC is losing market share because many of its equity funds have been underperforming. That apart, compared to the other listed players, the main ones being Birla, UTI and Nippon, valuations of HDFC AMC are on the higher side.
Yeah.
You know, it's still quoting at about 8 times its book value, which is fairly expensive for AMC that is losing market share. That said, I think these are the kind of opportunities that market throws. You know, you're never going to get the best company at the best price. You get one of the two, and the longer term bull theory for mutual fund investment in the country still remains intact. So that could be one of the reasons you're seeing support in the stock at lower levels.
Santo HDFC AMC is probably one of the only few large cap stocks in this market which are below the lows that they had made before COVID, right? So
yeah.
They have eradicated what 2 years of almost 3 years of whatever returns they basically made, and that goes to show that there is something here that is probably persistently, wrong compared to the rest of the industry.
Yeah, but most business do have those phases, right? I mean, you've seen with big names like Infosys. Take any of the big names. You know, there are periods when and this is the third largest AMC, and it has done well for a long period of time. And this is the last 2 years that you're actually seeing.
What market is pricing in here is that it used to be the second largest AMC when it listed. Now it's the third largest. What market is pricing is that another 3 years, if this continues, if this sort of performance continues from the company, it would may probably drop out of the top 5
They are taking some measures to kind of counter it.
And plus, let's just remember that more and more retail investors are consistently driving themselves away from mutual funds and getting into the equity game on their own feet. Right?
No, I don't think so, CJ, because when market corrections like these come, right, that is the time when again you see people moving out of equity and then shifting into something more safe and steady.
We still have to see whether that has transpired this time around or not. We cannot make that judgment right now. At this point of time, what we can see from whatever high frequency data you tend to get from quarterly earnings and monthly mutual fund data, it doesn't seem that investors have suddenly turned around and said, oh, equity mutual funds are going to outperform, they are going to give me greater returns than me participating in the market directly, and therefore I should shift back to equity mutual fund. I don't think, given that they have already tasted blood of direct participation and the money that they have made, it's not going to be so easy to wean them out of that sort of a
We'll resume this conversation after this month's, after April's SIP inflows.
Absolutely.
Well, next stock.
Moving on, another stock that took a battering today was Coforge, a mid-cap IT name. Again, similar reasons. There were dealing room chatter that a large mutual fund was probably active on the counter and probably one of the sellers. It is possible that they probably may not have even initiated the selling, but a lot of traders were anticipating that selling to happen and they added bearish position on the stock. But now if you look at Coforge, after the block deal recently wherein the promoter paid a significant amount of their stake, and the sentiment for the stock has largely been very negative. Valuation also have moderated a lot compared to the sort of highs that they saw in 2020, and that has happened across the IT space. But the mid-cap IT earnings that have come so far, they have indicated one thing, that mid-cap IT companies are providing the sort of growth that a lot of the large cap IT companies were providing in FY22. So given that in mind, and given that the general optimism for demand for IT and mid-cap IT remains very strong, I will not be surprised if this sort of a correction, the 2 months or 3 months correction in Coforge could be used as a buying opportunity by investors.
Well, the promoter selling stock in this market is, I would say, a red flag. Second point, I think the whole IT sector as such is seeing bit of a derating. The sentiment has dramatically shifted since over the last 1 month, and if this trend were to persist, then clearly second line IT companies are likely to be hit harder than the front line. So that I think so in this kind of an environment, maybe it makes sense to stick with the larger names. Adani Wilmar, the next stock on our watch list. Now very sharp fall from its record highs seen just about a week back. It had gone all the way up to 878.
Lower circuit after lower circuit.
Yeah, 3 days in a row, and I think that's unwinding of a lot of speculative positions. Stock has lost about 26% in just about a week's time. Yeah. That's pretty steep fall. The fourth quarter numbers were not all that great. I think that was the starting point, Till then, the general feeling was that the company will continue to deliver numbers, and as well as rising edible oil prices is kind of a positive. The company will take market share from the smaller players, but now I think technical factors have set into kicked in. Many brokerages feel that this stock is now looking very expensive. That apart, the big run and the fact market is going down is tempting many people to take some money off the table.
Well, having a low float can be a double-edged sword, Santo. When the market sentiment is good, the sentiment towards the company is great, you will tend to rise very rapidly. But when the moment the sentiment turns a little iffy, you also tend to fall very rapidly, right? And that is what we are seeing with Adani Wilmar. But that said, I still feel that given the sort of commentary that came in from the management, even though the Q4 numbers were a little below par and below street's expectations, they still are counting on market share gains. They're still counting on benefiting from the price rise in some of the products that they are in. Given that they have a leadership position in the edible oil space, therefore it also gives them a decent amount of pricing power as well. So the margins will also the hit on the margins will probably be limited to compared to a lot of its peers. So therefore, it is possible that once these technical factors are out of the way, some of the longer term investors may again start getting into the counter. Let's remember the Adani Group stocks previously also have gone through such downtrends. If you remember what was happening in mid 2021, they went through similar 20, 25, 30% correction, but they again came back roaring, and the earnings of some of the counters have shown that. So I would probably not totally discount Adani Wilmar at this point of time. That's said, another counter which is basically coming out of the well and is shouting that buy me is Hero MotoCorp. What a performance today, Santo. The stock was a top gainer on Nifty in a weak market where almost every sector, every stock is seeing weakness. Hero MotoCorp stood out very clearly. And the reasons are also very clear. There is building optimism now among investors that the two-wheeler cycle is probably turning around. We have already seen that inventory. I mentioned earlier today that inventory days or the amount of inventory that two-wheeler companies have in the industry right now has fallen sharply to about 20-25 days compared to the industry average of 30-35. And that basically goes to show that there is demand out there. All that they need to do is to fulfill that. They have so far not been able to fulfill because of the semiconductor shortage. And of course, in Hero's case, because it's more linked to the rural sector, therefore there has been issues around that. But rural demand is likely to improve in the second half of this year with good monsoons and higher agri prices. And probably market is already sensing that and is trying to get into the trade a little early.
Counter argument, CJ. Inventory days coming down is also a factor of outlook on demand. If you look at the latest retail numbers which were declared by FADA, two-wheeler sales are still probably slightly lesser than pre-COVID levels. Now the growth over 20 and 21 were quite sharp, but that also is coming off a low base. If you compare it back to pre-COVID, it's still much lower. That could be one of the reasons. Demand is weak, and there's a variety of factors out there. Mainly rural sector is still struggling. Fuel prices are high, input prices are high. Now loan rates are also going up. All this, these are pretty hard factors for something like two-wheelers, which are very, very price sensitive. So I think there is a reason because of which companies are also cutting back on production. So I wouldn't be too bullish on two-wheelers at this point.
That's it. Coromandel International. What do you have on there?
Yes, the stock has been gaining ever since it reported its fourth quarter numbers.
Very strong numbers.
Good numbers there, and it's the government's decision to increase fertilizer subsidy that's seen as a big positive for Coromandel International. Now the fact is that crop prices, global food prices are continuously on the rise, and if farmers are able to control their input prices, keep the input prices in check, that means demand for companies like Coromandel will continue to rise. So margin should not be under pressure. That's the play out here, and the stock is close to a new 52-week high.
Well, no countering that, but another stock that really caught my eye today was TARC. TARC was down about 5% in trade when I had a look at it, and it was surprising to me given the sort of gain the stock had seen in the previous session after indicating that it has raised about 1300 crore from Bain Capital. Now, the company has been trying to turn itself around. It's in the real estate space, so it's been trying to turn itself around. It's now going to utilize the 1300 crores that it has got from Bain Capital to pare down its debt. Debt had been the bigger overhang on the company because it has such a bloated balance sheet. It could not invest in new projects and new inventory. Now that probably the debt situation is improving, you could see TARC benefiting going ahead. You could see a little improvement on its earnings as well in the coming quarters. There are, of course, concerns that now real estate demand, whether it will be able to get out of the entire interest rate hiking cycle, whether it will remain strong in that period. There are still concerns and jury is still out on that. But if you look at it from a overall 7 to 8 year cycle, we know that real estate is coming out of the dumps and getting into a bull market cycle. If you keep that in mind, then TARC becomes a cheaper valuation, reasonably valued. I would not even say cheap because it's valuations are largely at par with the industry. But it's a reasonable bet compared to some of the other bigger names which have seen a run up in their valuation.
Well, and let's take a quick look at the market before we wrap up. I think we have
just opened my Moneycontrol app and yeah, it's not looking pretty. I was hoping that it will probably look a little better.
No, but it's still off the lows to some.
A little bit. I mean, if you want to be really, really optimistic about it, we were down about 1.9%, so we are now down about 1.5%.
Most crucially, Nifty is above the 16,400 mark, which is seen as a psychological level by most traders, and that makes a difference.
I mean, that could probably deter the bears tomorrow on Monday to not go so short at this point of time, given that if the 16,400 level holds, we could see a little bit of a pullback rally on Monday morning, depending on how the US markets react later today. So that is a good sign. If you look at some of the individual counters at this point of time, Hero MotoCorp, as said, is doing pretty well. It's up about 3% in trade right now. Power Grid is doing well, up about 2%. ITC, the stock that you have been harping about recently, is doing again very well, up about 2%. And leading the losses are Bajaj Finance, Divi's Lab, Shree Cements and UPL, which are all down over 4% in trade right now.
Well, there's a statement from Axis Mutual Fund that they're finally saying that 2 people have been suspended.
Yeah.
Yeah,
and that was the section that we are going to get into now.
Right. Yeah.
So the thing about Axis, of course, is in case you missed that section, we wanted to address that, and there was reporting from Moneycontrol throughout this week that the regulator possibly is looking into the mutual fund with respect to some front running of trades. Now, what is front running, right? So, as I am a mutual fund, right, and I have told my dealer that I want to sell this stock, right? Now, as a dealer, it is your fiduciary duty to not utilize that information for your own personal gains, right? But what sometimes dealers tend to do is that because they have that information, they could possibly go out and trade from their personal account or maybe through their wife's account or their mother's account and probably go and short that stock. Now, because you had that information prior, you get to benefit from that information. And that is what is front running basically. Santo also had mentioned that a few times when you talk about block deals as well. So now the news is that 2 of the fund managers, as we can see in the statement that has come out from Axis Mutual Fund currently, that 2 of his fund managers have been suspended on suspicions that they were involved.
Irregularities. They have not been, they have not clearly mentioned anything. They've just
potential irregularities, which by whatever media has reported as basically possibly allegations of front running some of the trades of the mutual fund. Now, the thing about this is that SEBI has anyway started investigating this matter, so SEBI is looking into it. But if you take the larger takeaway from this is twofold. A, we are seeing the sort of reaction we have seen in some of the bigger holdings of Axis Mutual Fund in the market today. Traders are clearly anticipating that the market chatter around possible redemption pressure on the mutual fund, because the sentiment of unit holders would be hit and they would probably want to take out their money. So that chatter has resulted in a lot of traders taking short positions in some of the biggest names: ICICI Bank, Bajaj Finance, Coforge, Info Edge, a lot of these stocks where Axis Mutual Fund has a significant stake have seen a big amount of selling today, apart from the general weakness in the market. So that is the one side of the situation. The other side is a bit more longer term. Remember, this is happening just a year after Franklin India's debacle, the debacle of their credit funds about a year ago, and where SEBI actually punished the mutual fund and asked it to refund some of the unit holders. Now, happening so soon after that event, it basically raises question marks about the governance structure and the industry itself. Whether the 10 years of effort that SEBI and the mutual fund industry had put into building confidence on the investors after the 2008 market crash, the entire mutual fund Sahi Hai campaign, what happens to that now? How will investor confidence will be built again by the AMC industry as well as SEBI? That will remain to be seen, and it will be something that is going to define how the mutual fund industry develops over the next decade.
CJ, malpractices are part of every industry. There's no, shying away from that fact. And this is not the first instance where SEBI has come across, a possible suspicion that trades were being front run. This happened in the past too. There was a dealer from HDFC Asset Management some years back, and eventually he was punished for that. So there will be these kind of developments, but will they kind of impact the longer term story? That looks very doubtful, because the kind of flows that you're seeing in the market, the kind of performance that equity funds have delivered over time. So from time to time you may see these kind of some hiccups along the way, but they don't change the long-term story at all.
Yeah, jury remains out on that, but in the meantime, people are having fun on Twitter, of course, and of course going after the banner of mutual funds. So yeah, I mean, some people will probably jump the gun on what it means.
And it is the weak, is the bearish market sentiment also, which is of exaggerating those kind of talks that of
possibly
widespread redemption. There would be some instances.
We will only come to know when the data comes out from the mutual funds end. That said, I think that is it for the show today. We will let you get back.
You've forgotten something. Is there anything on the horizon what you're looking for?
Oh yes, definitely. RIL earnings will be the most crucial. Market will be reacting to that on Monday. Apart from that, we have Tata Motors, Tech Mahindra, as well as Adani Ports, which are going to come out with their Q4 earnings. But the most important economic data next week would be the US inflation. The April CPI print for US will come out possibly on Wednesday evening. So it could end up defining how Thursdays and Fridays trade will happen. And remember, Thursday is also the weekly option expiry for Nifty. So you can probably expect a lot of volatility next week as well.
Well, with that, it's a wrap on this episode of Markets with Santo and CJ. I hope you enjoyed watching this episode. Do share your comments.
Yes, and do stay tuned to Moneycontrol.com and the Moneycontrol app for rest of your business news. Thank you so much for watching.
And have a nice weekend.